We at Centrum Broking pleased to host the FY18 results conference call for Mirza International. Today from the management, we have Mr. Shyam Avasthi, VP Finance. I would now like to hand over the call to the management, followed by which we can have an interactive Q&A. Over to you, sir.
Hi, good afternoon, everyone, and thank you for joining our call today to discuss Mirza International results for Q4 and FY18. And Mr. Suja Mirza could not join the call because of some urgency. So I will start by giving an overview about the quarter gone past, and it will be followed by the detailed financial analysis. Our Indian branded business have achieved 75% growth in FY18. Now the breakup for this Indian branded business is branded footwear sale is grown by 75% to rupees 290 crores. And branded garment sale is also grown by 75% to rupees 101 crores. So total branded business in India is 391 crores. The export sale during the quarter was down, during the year was down by 18%. And during the year we have opened 10 large format online stores, mainly in the Q3 and Q4, which are giving very great numbers. Total online stores opened till now, till 31st March are 10. And total count has reached to 159 as on 31st March. We have launched a new women's footwear brand, Mode, M-O-D-E Mode, in the market, and the ladies' sports shoe under the existing Red Tape brand. We have got now diversified product portfolio like leather shoes, sandals, PU shoes, sandals, sport shoes, canvas shoes, slippers, ladies' brand, and the garment accessories. With that, I will give the highlights of the financial results for Q4 and FY18. Total income for FY18 is rupees 972.5 crores as against 936.55 crore in the previous year. There is a growth of 3.83%. The net profit after tax for FY18 is grown by 9.3% to rupees 78.41 crores as against 71.74 crore in the previous year. The PAT margin for FY18 is 8.06% as against 7.66% in FY17. The EBITDA for FY18 is grown by 8.07% to rupees 173.98 crores as compared to rupees 160.98 crores in FY17. The EBITDA margin for FY18 is improved to 17.89% as compared to 17.19% in FY17. Now the export performance for the FY18. Export sale of footwear for FY18 is 501 crores as against 611 crores in the last year. There is a decline of 18% on YOY basis. The UK market is declined by 19%. The US is also declined by 18%. Rest of the world has gone down by 16%. Now the Indian branded sale of Red Tape is 391 crores as against 224 crores in the corresponding period last year. There is a growth of 75% on Y&Y basis. Now the quarterly results. The export performance during quarter 4 is export sale of footwear for quarter 4 is 110 crores as against 118 crores in the last year. There is a decline of 7% on YOY basis. The UK is decreased by 6%. Rest of the world is also decreased on the same level. Indian branded sale of Red Tape for quarter 4 is 96 crores as against 66 crores in the corresponding period last year. There is a growth of 45% in the Indian branded business in this quarter. The advertisement expenditure for FY18 was 18 crores as against 9 crores in the last year. It is somewhere 4% of the total domestic branded revenue. Net financing cost in FY18 was 24.96 crores as against 25.93 crores. The net borrowing has been increased to rupees 270 crores. The debt equity ratio has reached to 0.47. The net worth of the company is increased to rupees 572 crores. The gross margin for FY18 is 51% as compared to 46%. The gross margin for quarter 4 is 56% as compared to 57% in the same period last year. The total count of the Red Tape outlet has reached to 159 as on 31st March 2018. But as of today, it has reached to 169. And the breakup is the online store which we have opened. These are the big, large format stores. There are 19 as on 31st May. and the rest offline store is 150. The total count is 169 as on today. With this, I will request to start the question and answer session, please.
Thank you very much. We will now begin the question and answer session. Participants who wish to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Varun Jha from Qtr4. Please go ahead.
Hello.
Yeah, hi, Mr. Varun.
Hello. Yeah, hi, sir. First of all, I wanted to know how much was the sales from Bond Street, and if you could give us the separate margins for Red Tape and Bond Street.
Yeah, the total Indian footwear sale is 290 crores, and out of this, 30% is the Bond Street and the sports footwear.
Okay.
Yeah.
And the margins?
The margin for the EBITDA level margin for all the products are the same. For the branded product, it's the same.
Margins have, I guess, increased from 17 to 21% in domestic.
Yeah, in the branded business, it's somewhere around 21-22%.
So across Red Tape and both the margins are around
across all brands.
Okay, and your working capital cycle has increased a bit. So this is because of last.
Yeah, actually, we are in the expansion. Last year, we have grown by 75%, and the next year targets are also high. So, to fueling this growth and we have increased our product portfolio also. The new ladies brand mode is being added. The sports is also a big hit. So, we require more working capital to fueling all these products to our different platforms. And we are opening the new online stores which have also good capex. Like one online store requires at least 1 crore. 50-60 lakhs for the interiors and all. 40 to 45 lakhs inventory is required. So, for fueling all this growth, yeah.
What are these online stores kind of?
These are online stores are a new concept in which the customer gets the product at the online prices, and he can buy and feel the product. These are the big 3,500 to 4,000 square feet stores, and they are giving the huge numbers. And till now we have got 19 stores opened, and for the next 3 to 4 months we are opening 25 more stores.
Okay. And I wanted to know your revenue recognition policy. Like when you sell to the franchisee, is it recognized?
Yeah, actually, I'm telling you. We have got 3 channels of the distribution in the domestic market. First is the one owned Red Tape stores. 50% are the franchisee owned, 50% are the company managed. When the stock in the franchisee store belongs to the company, we do not bill to the stock it is a stock transfer. When the customer takes the product from the franchisee store, then only sale is booked in the Mirza books.
Okay.
Yeah.
And lastly, what is your view on the exports and the rupee depreciation?
Export, if you see, in the last quarter, export is degrown only by 7%. So it is recovering, and we have got the visibility of 3-4 months. So we are hoping to achieve, somewhere in double-digit growth in this year. Means trying to achieve the same level of the last year.
And this mode has started, will start this year, right? Mode.
Yeah, it will start. It has just launched. It is launched online.
Okay. Okay, thanks a lot, sir.
Thank you.
Thank you. Next question is from the line of Pratyush Mittal from Mittal and Company. Please go ahead.
Hi, sir. Sir, I would like to understand about the fixed and accounting policies for inventory. Like, do we do any kind of aging or anything for it?
We have got the ERP system for this inventory for this domestic, and we record the inventory at the cost level, at the cost of market price, whichever is lower. And for the aging, we just track the aging, and whenever there is a stock which is not moving since last one, we just move the stock to our online marketplace model. So we just we have got the 3 distribution model. Like we are available in the Red Tape retail shops, which are around 169 right now, We are available in marketplace, online in all the leading portals like Amazon, Flipkart, everywhere. And third is we are selling to the big, wholesale retailers like Shoppers, Lifestyle. So we are available we're selling the products in all the three formats. So we just keep on checking the products, the inventory which is not moving, which is moving. So we keep on changing in these three or four channels.
But sir, there must be some certain slow-moving items or items that are not working. For example, we are into garments as well as women's shoes and everywhere. So, how much of the inventory will be, say, more than 3 months or 4 months or maybe half a year, which is remaining unsold? And do we identify them and can we get any amount for that is still in inventory?
Sir, actually, we don't have inventory which is more than 1 year old right now. And within the 1 year inventory, we just keep on changing the inventory. That's, when the sale period is the best thing. We get the sale period, in the January, February, the sale is come, July, August. So all this inventory, we just sell it off. There is no point keeping this inventory and having the loss. Just sell it at one point and book the loss. That's it. Okay.
Also, sir, I would like to understand about the risks in the tannery division. Like there are news about downing of inventories in UP. So what are the related risks in the tannery and will it keep running in future?
Actually, the tannery, we have got the India's biggest tannery and we have got all the permission, all the pollution plants. Our pollution plant is the biggest in India. So there is no risk from any government official regarding the raw material availability. India is the second largest exporter of the meat. And raw meat is the byproduct of the meat. And the most of the, these slaughterhouses are available in the UP. So the raw material has never been a challenge. And we are in the trade since last 36 years. So we know the nerve of the trade. So raw material has never been a challenge for us.
So there was some order by government of UP that there will be closure of tanneries during the Kumbh Mela time for 2 months. So
there are somewhere around 100 to 200 tanneries, very small tanneries in the Kanpur and now. The person having one ton is called tannery. We are the biggest tannery. We have got all permissions. We never shut down because we have got all the the biggest effluent treatment plant, which is the main concern of the government. So we never shut down. So we have got all the permissions. There is nothing which is affecting us.
Okay. So, if I understand it correctly, then it will keep running even during the Kumbh Mela time.
Yeah, we don't close.
Okay. Also, sir, one more thing that there was about the import duties on shoes from China, and we were planning to shift to other places like Vietnam or Bangladesh. So, any updates on that?
Yeah, actually, the government has increased the custom duty in the sports wear. So the sport has been a very good hit in the market. So the orders which is still in the pipeline, we are importing that orders from the existing suppliers. And what we are doing, we are just increasing our MRP to bear that that difference of 10%. And for procuring in future, we are trying to tap the manufacturing in the Bangladesh. So we are doing both of the things, because increasing the MRPs also, and is trying to tap the new. It's not it will take some time to get the supplier, get that quality, compromise on the quality. So that will take some time, but that is not going to affect our market.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Shailesh Kumar from Sanidhi Securities. Please go ahead.
Hi.
Hi, Mr. Shailesh.
Yeah, thanks for the opportunity, Shyamji. See, I have seen that debt level as at the end of the quarter has gone up. Where do you see the number as on March 31, 2019?
Actually, right now the debt is 270 crores.
Right.
And this will go somewhere around for FY19. It will go somewhere around 325 to 330 because we are in the growth phase.
Okay.
Our plan for this year in the domestic side to grow at least 50%. Our target is to reach 600 level in the domestic branded business in India.
Okay.
So to fuel this high growth, we have to open our online stores and we have to keep the minimum inventory at all the levels to feed all the channels. So that level will increase. But it will be, for the 1 year or 1.5 years, because when when everything comes into the cycles and everything, all these things will, started to come down.
Sir, what is the competitive scenario in domestic markets?
Competitive means actually the product which we are having, like the leather shoes. So we are the pioneer in the leather. We are the biggest tannery, so we know how to make the leather. So there is no competitor for us in the Indian market for the leather shoes.
Okay.
And in the export shoes, we have tapped our shoes in the price range in which no other big brands are selling their shoes. That's why we have launched this sports model in the second of the quarter, and we have clocked such a big revenue. That is contributing, these sports and bond street is contributing somewhere 30% of the total revenue. That's a good number. So that's why our sports and the comfort level in our sports and the price point is such that all the person is accepting is very well.
Right. So, when you are targeting around 50% kind of growth in domestic sales, just for understanding, what would be the growth that would be coming from leather shoes, which are our existing products, and what would come from the newer additions, like the sports footwear, Bond Street, this women fashion shoes, and
actually, right now, in the footwear, the 30% is the new product which are contributing.
Yes.
This will increase from 30 to maybe 40%. But from what channel we will get this growth, that I will tell you.
Okay.
Right now, we are selling through these all three channels. Like we have got the retail outlets. The last year we have clocked the revenue of around 135 crores from the retail outlets.
Mm-hmm.
And we have opened 10 online retail outlets last year. Mm-hmm. And we are planning to open, 25 more in the next quarter. So at the end of this 3 months, the total online store will be somewhere around 42. And each retail outlet store is giving somewhere around 3 crores on an average annual sales. So
okay.
This will give around 120 crores additional sales from the online outlets.
Okay.
And the existing channel, like the online, we are planning to get a growth of, somewhere from 120 to we are trying to reach at 175 level. Wholesale business is also giving some growth. So means all these 3 channels will accumulate this 50% growth.
Okay. And what is this Mirza Hong Kong about? I mean, we have recently merged it with the main company.
Yeah, actually, Mirza Hong Kong is a company we have recently opened to procure all these. So we have started the trading business like sports footwear we are importing. Like we are importing the products from the clothing from the Bangladesh. So we have opened this company to sourcing the material from the different. We will open the office there in the Hong Kong. We will sit our persons there. They will procure these products. So they will, give us a link between the, supplier and so that the person team can sit there. They can find the dedicated vendor. They can line up the supplies in the timely manner. That's why it's basically the purchasing company.
Okay. And what has been our production of tannery during FY18 and Q4 FY18?
The tannery has, the production capacity. They have utilized somewhere around 55% of the total production capacity.
Full year?
On a full year.
Okay. And how do we see this capacity being utilized in FY19?
It will increase as our total band will grow by 50%. The leather products will also grow by the same level. So the leather will come from the tannery. So the tannery should give some improvement in the next year.
We were planning to export some upholstery products to these East Asian markets.
Yes.
Has there been any progress on that?
Yes, we have started selling the upholstery. Mainly in the last quarter, we have sold around 2 lakh of square feet upholstery. And this year, the good orders we have. That's why we are hoping to, increase the exports in double-digit growth.
Okay. So, can we expect, say, another 15-20% kind of enhanced capacity utilization in tannery?
Not 15-20% is the higher thing. I
10%?
think 65 to maybe 60-65% can be achievable.
Okay, fine. Thank you, Shyamji.
Thank you.
Thank you. Next question is from Nikunj Doshi from Bay Capital. Please go ahead.
Hi, Mr. Avasti.
Hi, Mr. Nikunj.
Yeah. I just wanted to understand, we were to start, I think, a distribution-led business also, low-price products and all. So is there any progress made on that front?
Yes. Actually, we have started the Bond Street is the one product which we are selling only in the distribution model. We have appointed a lot of distributors pan-India. And we have started, the new product that is called the PU sandal. The slippers and the sandal, there are a variety of products which are very low margin, low price products. So we are planning to we have started selling all these wholesale models through only. These products are not going to our existing, the outlets channel to the whole, to the, modern retail. These are only being sold through the distribution model.
Mm-hmm. But, so how far we have reached? Any significant breakthroughs or any kind of revenues target?
Actually, the revenue is not so much, but you should have these kind of product to have your presence in the market.
Mm-hmm.
That's why. But it will increase, in the coming year, it will also increase.
Mm-hmm. And this domestic retail branded business 391 crore. Can you give break up as to what channel is selling? What means you mentioned retail through retail outlets for 35 crores.
Retail outlet is 135 crores.
Yeah.
The online model is 118 crores. Online marketplace.
Mm-hmm.
And the wholesale business is giving 138 crores.
Wholesale 138.
38. That makes 391.
Okay. And for this year, you are expecting branded to be what?
600.
600 crores.
Yeah.
So 391 will become 600.
Yeah.
And margins wise, we should assume the same kind of margins?
Margins we are trying to have this 18% EBITDA.
Mm-hmm. Okay. Thank you very much.
Thank you.
Thank you. Next question is from Pratik Chaudhary, who's an individual investor. Please go ahead.
Good afternoon, sir.
Hi, Mr. Pratik.
Yeah. Sir, could you give a breakup of the inventory for, how much would be the tannery or rawhide inventory out of the total 380 crore?
The tannery inventory is somewhere around 100 crores.
Okay, and this includes, this is basically rawhides and other...
This is basically rawhide, red blue product. Actually, in the tannery, we buy on a seasonal basis. When there is a good season, the prices are lower. So they stock them because in the summer, the skins are not good, the prices are very high. So we have got the capacity, so we just involve the fund. That's why we get the pricing in a better way.
Mm-hmm. Okay. And if you could also give the bifurcation between apparel and the footwear inventory.
Actually, apparel and footwear inventory, that is a mix of all this backup. Apparel is not so much. Apparel will be, I think, somewhere around 8 to 10% of total inventory. 8
to 10% of the total inventory.
Yes.
Okay. And if you could also tell about the inventory meant for, the branded inventory and the made-to-order export inventory.
Actually, made-to-order export inventory is very much diversified because we have got 6 factories out there. So every factory requires a minimum level of the raw materials and a minimum level of inventory. So that is very spread.
That is very?
That is very spread. Each factory...
But say a general percentage breakup of the 380 crore. Would it be, 40-50 kind of?
Maybe the export inventory will be around maybe 30%, 30 to 32%.
Okay. So the remaining has been basically created for the upcoming growth in the domestic market.
That's right.
Okay. And since since we have launched in all of these new categories and we have to feed the channel as we before we actually launch those products. So at what level do you basically figure out that, we don't have to go beyond a certain level of inventory and such that it doesn't add to because you also are taking working capital and borrowings for this. So what is that level wherein which you decide we don't have to go beyond this level of inventory?
Actually, the level is also in place. Is for each product-wise, we track the inventory. because which product is selling in which channel, and we just on weekly basis we trying to figure out that this product is to be moved to the other product. These all exercises is being done. That's why the inventory should not be piled up. If there is the old inventory which is not being selling, we just sell it in the in the marketplace, or it is sold in the discounting period.
Mm-hmm. Okay. And this 600 crore guidance that you have given for the Indian branded, are the first 2-3 months on track for achieving this?
Yeah, it is on track. All the 12 months will not be the same, and it varies from quarter to quarter, but we are on the track.
Okay. Okay, sir. Thank you. I'll get back in the queue.
Thank you.
Thank you. Next question is from Ayush Mittal from Mittal & Company. Please go ahead.
Good afternoon, sir.
Yeah, hi, Mr. Ayush.
Congratulations on this good growth in the domestic market.
Thank you, sir.
So, sir, if we have to think about the company which has been transforming from the export business to domestic business, wherein you are trying to create more of your Red Tape brand, some questions come to my mind, like Red Tape has been known more for the leather footwear. Now that you are trying to do many more things like sports shoes, apparel, bond street, how are we creating that awareness for our consumers in terms of this brand building and all those things? Will our advertisement expense have to be materially increased to create that pull?
Actually, the thing is that the Red Tape is also have very good, brand respect, very good, recognition in the people. But the brand was not so big. We were not able to, encash the brand. Thereafter, we realized that we should add the products, because in the leather, leather is we were selling at the 3,000, 4,000, 4,500 price point level. The customer for that price point is very low. That is a very niche customer. So we were not able to grow with that brand. So that's why we decided to launch the sports footwear, the bond street for the for the youth, for the people wanted to wear the brand, but not so expensive. That's why we have started this canvas shoes and variety of the product. So for us to be a brand, we need all this product portfolio. That's why then only we can grow it. And for the advertisement point of view, we are advertising in the Times of India, and we are advertising in the digital marketing, in the in-flight magazines, in the the movie theaters. But we are not going for the channels, the TV channels, which are today there are a lot of channels and people doesn't know what to see in which channel. That is waste of money, which we think. So our the target for the advertisement last year was 14%, and next year will also be 4 to 5% only.
Okay. So if I have to think like somebody looking at the sports shoes, if he has to buy a sports shoe, why will he come to Red Tape, or why will he get incentivized to buy the Red Tape shoe versus when I see the branded shoes are doing very, very well? I do understand that online our pricing is very attractive, but in a physical store, I think the pricing would be in the 3,000-4,000 rupee range, while Adidas Reebok might be in 5,000 rupee range.
Sir, actually the product the comfort which we are giving at that point of your time, which is not comparable to their brand. We have opened our first online store in Ambala. It is on the highway of the Ambala, and next to our showroom there is a Skechers showroom, and we have achieved 50 lakh of sale in the first month. That is the awareness of the brand. So people get the product, they feel the product, they are comfortable. That's why they are adopting, and Red Tape, the sport is a big hit.
Okay. So we were earlier targeting to do maybe 80 to 100 crore of sales in sports shoes and also in bond street. While if we see the numbers, what we have shared, it seems much lower than our expectations as of now.
Yeah, actually the sports and bond, the sports mainly was launched in the last of the second quarter. So we could not get the full year for that product. And this year we will get for the product. And the quantity which we had ordered was sold in a very few times. So we were short of the quantity because we were not expecting such a good sale in that period. So that's why we have imported such big quantity. This year,
Hello.
Participants, please stay connected. We seem to have lost the line for the management. Please hold your lines while we reconnect the management. Thank you. Participants, thank you for patiently holding your lines. We have the line for the management reconnected. Over to you, sir.
Hello.
Yes, sir. So you were telling about your Ambala store experience.
Yeah. So that's why we were not prepared for such a good numbers in the sports, and thereafter we have ordered sufficient quantity, so you will get the good number in this year.
Okay, and in the Ambala, that 50 lakh number continues to happen as of now also?
So it is not 50 lakh, but it is near to somewhere around 30, 35 lakh, 40 lakh, 50 lakh, 45 lakh. But that store is giving good numbers.
Okay. So if I have to look at the overall company turnover, we have been at around 900 crore, 950 crore range for 4 years now.
Yeah,
so
right.
We have done well on the domestic side, but the exports have faltered for us continuously.
Right.
Perhaps in between it was currency, Brexit and all those things. Now that the rupee has fallen, are you seeing some improvement? Like last year also you had indicated that export should be same as last year, but we have degrown. So what about this year?
Actually, the export, it is not something that Mirza's export is down. The overall India's export industry is down. Everybody is down. And for the Mirza, this means we have got the visibility of 3 to 4 months because orders in hand. So for this year, it looks, in the last quarter, the degrowth is only 7%. So we are hoping this month that it should recover, and it should recover to the same level of the last year.
To last year's level of FY18 or 17?
To 17.
That is approximately 630 or 50 crore, I think.
Yeah, up to 600 crore, maybe 570 to 600.
So this year you have done exports of, I think, 530 or 550 crore?
500 exports footwear.
Okay.
And leather export is also 25, so total 525.
Against this, you are expecting maybe a 10% odd growth.
Yeah, maybe in double digit.
Okay. And sir, another question I have is about the pricing. Like when we see that you have done very well on the online format, but usually we see that across the times there's a discount of 50, 60 odd % on the Red Tape brand.
Yeah, right. Actually,
so how do you manage
the discount which you have seen that it is in the marketplace? The marketplace model only works on the discount. So that the pricing is done in that manner. And for our offline stores, when you go, you will get the discount only in the discounting season only. But for online outlets or for the online marketplace, it is based on the discounting model. So you will see the discount whole of the all the brands.
Can you speak lastly?
Yeah, you will see the discount in the online model in mostly all the footwear brands. So that online model works only on the discount. So the MRP is also adjusted on that basis.
Okay. Can you give us a sense of the realization that we get, average realization on our sport shoes as of now?
The average realization for the sport shoes for this year somewhere around 180 rupees. 1080.
Sport shoes?
Sorry, exports. You're talking about exports or sports?
Sports.
Sports. Okay, sports realization is somewhere around 16 to 1700 rupees.
Okay, and even at this level, we are making sufficient gross margins of above 50%.
Yes. You see the margin of the company is 18% EBITDA level is still maintained.
Okay. Great, sir. Thank you, and wish you all the best.
Thanks.
Thank you. Before we take the next question, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from Tushar Sarda from Athena Investment. Please go ahead.
Yeah, can you give me breakup of Red Tape, Bond Street and sport shoes?
And the total branded sale of the footwear is 290 crores. Out of this, 30% is the Bond Street and sports. The rest 70% is the Red Tape.
Okay, so out of 391, 290 is the shoes, and 101 is?
101 is the garment and accessories, red tape garment accessories.
Okay. Within Bond Street, what is the breakup of Bond Street and sports within 87?
Actually, we don't give the breakup brand wise, but we have got category the breakup with the red tape and the rest of the brand.
Okay. And you used to share the quantitative information, and you had said you will share at the end of the year.
Actually, the thing is that in the export, I can share the quantity information. For the domestic, we have got so number of brands like we have got the red tape footwear, normal leather shoes. We have got the sports footwear. We have got the slippers, which is sold at 100 rupees. We have got the PU sandal, which is sold at 200 rupees. So the quantity information has no significance.
Okay. Okay. So now my next question is, your inventory has gone up from 264 crore to 382 crores.
Right.
Okay. And usually inventory is valued at cost or market price, whichever is lower. And if I see your cost of sale, that is around 500 crores.
Right.
So this is almost like 1 year inventory. Is that correct?
No, sir. Actually, the thing is that the total inventory doesn't belongs to this domestic. We have got the TAMI division, which is the backup of the export. So that has got some inventory. The export, we have got 6 export units which are making the export to make to order segment that have got minimum inventory in each of the factories. We have got a domestic division that was shown. The total inventory is 370 crores, 383 crores. So we have to take it on the segment wise. For the domestic, because we have grown by 75% in the domestic last year, our target is to grow 50% in the domestic this year. And we are opening new online stores, which are bigger stores, which requires more inventory. And our product portfolio also, diversified. We've got so much of the product. That's why the inventory level is increased to fuel this high growth. The 50%, 75%. That's why this is increased. We have to feed all the channels because we have got 3 big online warehouses, one in the Noida, one in the Bombay, one in the Bangalore, to supply to the marketplace model. We have got 169 retail outlets all over India. We are supplying to all these big retailers, Shoppers, Lifestyle, Metro, Mochi, to fuel all these channels to supply all the products to all the product portfolio. We have to increase this inventory.
Thank you.
Yeah.
The next question is from the line of Nikhil Upadhyay from Securities Investment Management. Please go ahead.
Yeah. Hi.
Hi, Mr. Nikhil.
Congratulations for a good scale-up of the business.
Thank you.
One clarification. When you said this 135 crores of the retail, this includes the sales from the 10 online stores also?
Yeah, it includes.
So can you give me a breakup between online store sales and the EBOs, traditional EBOs which we had?
Actually, the thing is that online concept was started in the October itself. In October, we have opened first store. We see it. In the up to 31st March, we have got 10 online stores. Most of them has been started in the February or March. Okay. So they don't have the full month of the sale. Let the full quarter be completed. We will give you the breakup. That will give the clear picture.
Okay, so that contribution is not
yeah, in April and May we have opened somewhere 9 stores, and 25 stores are lined up in next 3 months.
Okay.
So let the store gets completed in 2 to 3 months of the full cycle, then it's worthwhile to give the numbers.
So by the end of FY19, our initial target was to reach 100 stores. So it still remains, or?
So right now 116, and these big stores are having the area of 3,500. Normal stores are having the area of around 700. So these are the 5 times of the new stores. So we have opened 10 stores. It means we have on traditional ways we have opened 50 stores on the area wise. We are getting that number.
No,
so the numbers is not so much relevant because these are the big format stores.
No, so in Q3 call, Shuza had mentioned that in calendar year we were looking at opening 100 large format stores. That's why I was just trying to get...
So to break that target, we have opened 19 till now, till 31st May. We have planned to open 25 in next 3 to 4 months. Then we will stop. When it will reach to 45 or 50, then we will stop. We will see the working. We will see the sales numbers. Then after we will plan for the next 50. So it will be in this way. For the year as a whole, it will be 100, yes.
Thank you. The next question is from Pankaj Kumar from Kotak Securities. Please go ahead.
Yeah, good afternoon, sir.
Hi,
sir. Yeah. Sir, my question pertains to Capex. What is the Capex that we are planning for the year?
The Capex for this year will be around somewhere around 40 to 45 crores.
40 to 45 crores.
Maybe 40 to 50 crores, that is the correct number, because we have to open these stores.
Mm-hmm. Okay. And this all will go through, go for the...
It will include our normal maintenance Capex for the export unit. It will include the Capex on the new online stores, new offline stores. It will include everything.
Okay. And sir, second thing is, you are targeting 600 crores from the domestic brand sales. So incremental 210 crores, that's what you're looking at. Right. So how much it would come from the new products and brands that you are planning to launch? So broadly there are three. One is your red tape.
The brand breakup is not there because we have taken the complete, all the brands will contribute to that level. But the channel-wise breakup I have told you. Most of the sales will come from these online stores because we were planning to open 25 more stores in the next 3 to months. And this online store will give around 100 to 120 crores of the sales in next year. And the rest of the 80 crores will come from this online and the wholesale business.
Okay, sir. Got it. And this apparel side, we have seen very strong growth. So how do you see this segment in the future?
This will grow in the same way. Actually, the total 600 target it includes apparel.
Okay. Thank you.
Thank you.
Thank you. The next question is from Siddharth Agarwal from Kannauр Capital. Please go ahead.
Hi, good afternoon, sir. Thank you for giving me the opportunity to ask these questions. So, my first question is, sir, we were primarily export-oriented business, and we were doing these wholesale manufacturing. From that, we are transitioning now to a more like a branded retailer, where we are going to carry significant inventory on our own books, which is something which traditionally we haven't done in the past. So, could you please take us through your strategy of how do we want to, or we are going to manage this inventory risk of off season, or so that we do not have large write-downs, in coming quarters because of obsolete inventory which is not running off?
You see, in the domestic side, if you see in last 3 years, we have got the 175 crore sale in FY16, and the sale was 225 crores in FY17, and it reached to 319 in FY18. So we are growing in the very fast way in the domestic, and this next year target is around 600. So we have achieved that level to this 75% level last year on quarter-to-quarter. That's why we have diversified. The main reason for this increase in inventory, we have got diversified product. Earlier we were having only the leather shoes. Right now we are having the sport shoes, the PU shoes, the slipper, the sandals. So the more product portfolio you have to feed all these channels.
Sure.
So you have to have the inventory. But if we were not planning to grow by 50%, then it should not. We don't need to keep this inventory at that level. So for the period which when you are higher growth phase, you have to keep this inventory, and none of the inventory will be non-moving, or we will not write down, because we will keeps on transferring the inventory from one channel to a different channel, and the normal 2 times sale in a year is the best example for selling all this inventory. Every brand does that. Nobody carries this. There's no point of carrying this inventory and booking a loss at a later period. So we just try to sell off the inventory. Whatever discount we have to give, we just clean the inventory, the old and non-moving inventories.
Okay. And so even when we sell off, slow moving inventory at, more than usual discounts, even at those prices, are we recovering a cost, or or on those sale prices can we actually make some loss?
Actually, all the products that cannot recover. Every brand has to sell. Some products we have to sell even at a loss, but the percentage is very lower. But there is no point keeping, because the pricing is done in such a way that we takes care of that non-moving inventory. Because if you pile up this inventory, you will end up nothing. So it's better to just clean the inventory. The inventory carrying cost you have to save.
Okay. And sir, one more question that I have is regarding the guarantee commission that we pay to the promoter. So what was the amount that we would pay for this FY18 financial year?
Somewhere around 8 odd crores.
So what is the total quantum of the guarantees that are given by the promoters for which we are giving these commissions?
We have got the limits from the bank. So the bank has given us condition that the total loans from the bank should be personally guaranteed by the directors. If the company fails to pay that loan, then the directors have to personally pay that loans. So that's why the directors are charging the guarantee commission for that loan.
So, but what is the limit amount?
The limit amount is somewhere around last year. The limit, you can see the last year limit. Maybe 260-70 crores.
So 250 crore roughly.
Yeah, 250, 260 maybe.
Okay. So this is roughly 3.5% of the limit amount.
But 250, and there is a bill discounting limit of around 120 crores. We have to take both the limits.
So yeah, so is there, sir, an alternative for us as a company to get, because we also have a decent balance sheet, right?
Yeah.
So because when we look at other companies, we do not see anything of this sort being reflected in some other companies. So why is it something peculiar to this particular company? I mean, I'm sure banking system is similar for all the companies. So why is it that, because we are currently roughly paying around 10% of our net profits, close to 10% of our net profits.
This is the directors are taking so much of the risk, because of that's why they are charging. And even after this, our EBITDA is the best in the footwear industry. We are having 18% interest is so long. So we are performing, even after that we are performing at the top level.
Thank you. The next question is from Sameep Kasbegar from Greenfield Advisory. Please go ahead.
Good afternoon, sir. Thank you for taking my question.
Yeah.
Just want to understand the reason behind doubling of our receivables.
Pardon? I could not hear you.
Just want to understand the reason behind the doubling of our receivables. Is this largely to do with our export business?
Can you repeat the question? Hello, Mr. Sameep?
Hello, sir. Yeah. Just want to understand the reason behind. Yeah, the reason behind the doubling of our receivables.
Yeah, receivables. Right. The receivables, actually, we have grown by 75% in this quarter in the domestic branded business, and we have got the 3 channels. So each channel, like you see, the retail sales, we get the cash only 1 or 2 days. There's only all the retail in the cash business. There is no outstanding in that. Now, in the online business, we have got 2 months of the outstanding, 2 to 2.5 months. But in the wholesale business, we give the outstanding of 5 to 6 months. So if you accumulate all these things, so the outstanding is somewhere around 3 months, which is at par with the normal market trend.
Okay, so this is largely to do with the domestic business. There is no large receivables from the exports.
No, exports we get only out of 133 crores, 100 crores is the receivables for the domestic, and 33 is the exports and leather. So primarily it is for the domestic, and because of this whole, 3 channels which I have told you. And going forward, this receivable will go down because we are planning to open the more online stores, which is only cash, cash generating cow. So it will go down.
Understood, sir. Thank you.
Thank you.
Thank you. Next question is from Avik Mitra from Aviksat Financial. Please go ahead.
Hi, thanks for taking the question. My first question is regarding your total loan and total interest rate. I find that your loan outstanding has almost...
I'm sorry to interrupt you, Mr. Mitra, but we can't hear you very well. Could you
Can you hear me now?
Yes.
Yeah, that's fine. That's fine now. Please.
Yeah. So your loan has doubled, but I find your interest cost has come down a bit. So what is the reason behind?
Actually, if you see our quarterly results, we have been paying the loans in every quarter. Debt equity was going down, but in the last 2 quarters, we have started taking the loans and loans increase because of this fueling this high growth. So we have taken this loan. First, we will utilize for the inventory level is increased. We use that loan for the inventory and for opening the new stores. And the total inventory, total loan is 270 crores and the bill discounted is 120 crores. The total outstanding is 390 crores. And going forward, this interest, this year it is not increased because in 3 quarters we have not raised the amount. In the last quarter we have raised this amount. So going forward, the interest will increase. You will see the increase in the interest in this first quarter.
So what would be the kind of interest rate on the total loan?
Average rate is somewhere around 8%.
8% on total loan of?
390.
390. And second is, you have said that you are having a bank limit of 150 crore which guaranteed by the promoters. So it needs to be increased going forward, or?
I think the guarantee commission will not increase.
But this loan limit has to be increased, right?
Limit will increase.
Hello? Hello?
We seem to have lost the line for the management. Please stay connected while we reconnect. We have the line for the management reconnected.
Yeah. Hello?
Yeah. So you are telling about the total loan and
the limit is increased from, right now the limit is somewhere around 390 crore as on 31st March 2018. And the guarantee commission is 8 point something crores. 8 odd crores. The guarantee commission going forward, the limit will increase, but the guarantee commission will not increase.
Okay, so it is just a fixed amount. Actually, promoters will keep charging.
It will keep in the same level.
Same level. And on the face of it, actually, I find it is 253 is the loan and another is 16. So what is the other is the receivables, right? That's what you have discounted.
No, actually, that is not 120 crore is the discounting that is shown in the contingent liability. That is not shown in the receivable because we will get the discount on the bank.
Where it is shown?
Contingent liability.
Okay. So, and second question is basically you are selling to the franchisee on stocks transfer basis. So what is the policy of their returning that to you?
Actually, the stock belongs to the Mirza, and we have got the ERP system installed there. So we keep on checking the inventory, the product which is not being sold, which is it's a regular, it's a day-to-day exercise. We keep on changing the product. The franchisee, what he does, he gets the commission at the end of the month on the sales he has made. All the money that comes into the Mirza account on daily basis. The money is ours, the stock is ours, sale is ours. He gets the franchisee commission at the end of the month. So the stock is controlled by us only. Hello?
I understood it. And what situation actually you take out the stock from their store basically?
If it's not selling in that store, we just take the stock from that store. We try to shift it to some other channels.
Okay. And what is the kind of, now I think as you are growing, your number of SKUs also is going to grow, right? The stock keeping units will going to grow.
Yeah.
So do these small setups have all the stock keeping ability to keep all the kind of stocks, or how do you decide on that?
We have got the ERP system in place. We got the regular reports of each product wise, each SKU which is selling in what quantity, in what channel. We have got a dedicated team there whose work is only to just check which product is selling, which is not selling. So it's a regular exercise. We just keep on shifting the product if it's not selling in one channel.
Hello. Thank you. The next question is from Avnish Agarwal from Prabhudas Lilladher. Please go ahead.
Yes, I have the question on this guarantee commission.
Yeah.
Normally, we have seen that the guarantee commission is paid, or say directors give their personal responsibility if the company is not having a good balance sheet, or there are not sufficient fixed assets with the company.
Yes.
So can you, sir, throw some light on the rationale that why do you require this sort of a guarantee? And we have not seen any other company charging this sort of an amount. So can't it be more like a corporate governance issue in future for you?
Sir, the thing is that the company is in the growth phase. The company is, the bank has given the loan on this guarantee. There is a requirement from the bank that these, loans should be personally guaranteed by the directors. So directors, if the company doesn't pay the loan, the director have to pay this whole loan personally. So they are bearing this. That's why they are taking this guarantee commission.
No, that I agree, sir, but is the balance sheet weak, or are there not enough fixed assets?
So fixed assets, but they are not for cash. No, fixed assets. It's a fixed amount. It is blocked.
You see, the bankers generally want some sort of a security, whether on inventory or on the fixed assets.
Yeah, they have taken that security, but even after that, they require the director's personal guarantee. But we have got this recommendation from a lot of investors. We will raise this issue with the management and get back to you.
Sir, at the end of the day, it is directly 10% of your reported PAT.
Sir, that's right. But even after that, our EBITDA is the highest in the industry. And since so long.
You see, interest burden goes below EBITDA. It's a part of your interest expense.
Sir, you take the net profit, which is also the highest in the industry. But we have noted your query. We will get back to you. We will raise this concern to the management and we'll get back to you.
Okay, sir. Thanks a lot.
Thank you.
Thank you. Next, we have a follow-up question from the line of Avesh Jain from Envision Capital. Please go ahead.
So just wanted to check the export sales under our own brand. So what is the outlook? It seems it have fallen more than the overall degrowth in the export business.
Right. Actually, the export going forward, I think it should grow. We are expecting the export to grow in the double digit. So the export branded should also grow in the double digit.
Okay. And sir, you have said about this online large format stores, 30 to 35 incremental stores. But what about the other offline stores? What is the plan?
The focus is on the online store. The offline store will be also in place, but whenever we will get the good place for the offline store, we will also be open this year. But the main primarily focus is on the online stores.
Okay. So any numbers which we have in mind?
Sir, right now we have got 169 stores as on 31st May, right. Out of which 19 are the online stores, 150 are the offline stores. And these 19 numbers we will add 25 more online stores in next 3 to 4 months.
Okay. Okay, sir. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Manoj Dua, who's an individual investor. Please go ahead.
Good afternoon, sir. What's the response of the ladies shows you have recently launched? What's the response you have got?
Ladies mode band is launched recently in the May month. It is launched in the online format. So initial response is good, and more numbers should come. Then we will be able to tell you after 2 to 3 months. Initial response is good.
Okay. In export sales made to order, our sales were down by 10%, and PBIT also fell by 25%. You have given a guidance double-digit growth. So, what are the factors that will impact the double-digit growth, and do you think profit will also bounce to the same?
Sir, we have got the visibility of 3 to 4 months of the export order in hand. So it seems that the orders are in good place, and means we are getting good orders. So we hope that means the export is not in our hand. We can only estimate and we can hope. We have the visibility of only 3 to 4 months. But for the year as a whole, what will be? It's our estimation that this year should go, because last quarter has grown by only 7%, and this quarter means we are seeing a good traction. So the export is not in our hand. It is depend on the overall geography, but we hope that it should grow in the double digit.
Okay. you have explained why your sports shoes is doing well, but you're doing good in garments also. What is the USP of your garment? Because that industry is completely competitive.
Yeah.
So how you are able to do well in that?
So the garment we are selling through our own retail outlets. So means including the garments, the idea was that it should be a complete men's shop. The person when enters in the shop, apart from the footwear, he buys the garment, the accessory. We have got the accessories like belt, bags, because it should, the wallets. So it should be a complete men's shop. That was the idea behind that, and the garment sales comes automatically with that. Right now we have started selling it on the C&F basis, on the MBO basis. That sale is also picking up. So now the garment is also available in the retail shops, in the C&F, in the online model. So garment is getting a very good presence, and we are importing now these garments from the Bangladesh and from the factories where all the big brands are buying. So the quality is good, the pricing is good. That's why the garment is getting a very good response.
Thank you. That's a flat.
Thank you. Thank you.
Thank you. Due to time constraints, we'll be able to take one last question. The last question is from the line of Vivek Ramakrishnan, who's an individual investor. Please go ahead.
Hello, Avasti ji.
Hi, Mr. Vivek.
Hi, sir. I have one observation and then two quick questions.
Right.
Sir, on guarantee commission, I just wanted to put forward my view as an investor.
Right.
Because management knows the situation, they know the strength of balance sheet, they know the power of the brand. So it's also an indication of the confidence of management that, the company will not default. So as an investor, if I see that guarantee commission reducing, it tells me that management is more confident of the company. So that's the observation as you put forward the case.
Okay, I will put forward. I have noted down your query. I will put forward before the management.
Yes, sir. So two questions for you. One is, what are the payment terms for the shoes that are traded? Credit days that we get.
For the imports, initially we were having no payment term. We have to pay the advance.
Okay.
And now, as the imports are settling down, the suppliers have got the confidence. We are buying big quantity. Now we are started getting the credit. That's why the limits are so high. Because we have to pay everything in advance. Now the supplier confidence is gaining. So we have started getting, credits.
Understood. And that will be like 15 days or 30 days, I guess.
Yeah, it is somewhere around 30 days, but it will, stretch a little more. We are trying to just push forward that, make it to 45, 60 days.
Understood, sir. Sir, at what point will we consider manufacturing these shoes in-house, sports shoe, at what volume or revenue?
Yeah, so the thing is that the total setup of the leather and the sports are completely different. We don't have that kind of the setup right now. Okay. When this product will reach at a level where we can plan some factories out there, so right now it is not in the plan. So the trading, we are getting good supplier, they are supplying the good quantity, the pricing is good. So in future, if we think that it becomes the product, the exports become so large, so we get such a good quantity, then we can think of shifting instead of keeping the factory here, we will, love to open a factory in the Bangladesh.
Understood, Avastiji. Thank you so much for your time.
Thank you. Thank you.
Thank you very much.
Thank you.
That was we'll take that as the last question. I'd now like to hand the conference back to Mr. Avasti for any closing comments.
Yeah. Thank you everyone for joining this call and hearing me patiently. And thanks for your confidence. Thank you so much.